Hello guys and welcome back to the channel. So today I want to talk to you about how much I love the Tesla price cuts on their vehicles as a Tesla stockholder. And this might be a little bit controversial, but to give you a quick understanding is I am a very long-term investor. I want to buy stocks for the next 10-20 years. And I don't want to have to think about the stocks that I have. I want to instead spend time focusing on increasing my income so that I can accumulate bigger and bigger positions on the stocks that I truly love. Currently, those are the ones that are covered on the channel, which is Palantir, Tesla, and Enphase. And even me, so many investors make this mistake that they think of Tesla as only a car company. And, you know, I like to think that I'm special as an investor, but when I looked at my Tesla valuation model that is also available for our Patreon users, you will see that I only take into account how many vehicles that they're producing. And while the whole world sees exactly what I'm going to show you, there's so much more happening in the company, which I'm also going to show you in this video. So this is going to be an interesting video, and all I ask for you is to hit the subscribe button so that you don't miss any of the future videos. So this 1 minute segment of this video really sums up what everybody, or not everybody, not you and me, the intelligent investor out there, but what the average Joe sees about Tesla.
Tesla now, whose stock is down 20% in the past 2 months, including a 2% drop today after they announced another round of price cuts. These are the 5th price cut since January, and they come about a week before new rules for EV tax credits go into effect. Let's turn to Phil LeBeau. Phil, does that explain their move here?
That's part of it, Kelly. The other part is that demand has been waning, especially for the two most popular models, the Model Y, which is the best-selling electric vehicle in this country, and the Model 3. So here are the new base prices for the Model Y and the Model 3. By the way, this base price for the Model Y, this is an all-new model, and it's coming in just under $50,000. The Model 3 now drops down another $1,000 to $41,990. The price cut fallout, if there is one, and we're seeing that today in shares of Tesla, analysts are not surprised. I read every analyst note today, and all of them said the same thing. Big surprise. We wouldn't be surprised if there are more. The wait times, as I mentioned, they have fallen, but at what price for Tesla shareholders? The price being gross auto margins. Will they fall under 20%? The expectation right now is that for the first quarter, they will come in at 20.1%, or 20.5, I should say, percent. And we could see that shift over the next 2 weeks before they report their Q1 results. Remember, Tesla still dominates the U.S. market, selling almost 2 out of every 3 electric vehicles in this country. But its market share is eroding, as many expected, as you see more electric vehicles come into the market. This, by the way, Kelly, it was up at 75% in the first quarter of last year. The standard range Model Y, getting back to your point, Kelly, about whether or not the new EV tax credits will have an impact, that's not expected to.
By the way, this talk about Tesla losing market share is so unfair for 2 viewpoints. One, if you have 100% market share and somebody just produces one product, you're already going to lose from your market share. And number 2 is that Tesla is ramping their factory as much as physically possible. So it's not that they're losing market share because the demand is waning and, you know, they don't know what to do with their cars and they have to slow out the production. It's because there's other car companies also producing cars and, you know, math. So there's no other way around it. And I think that this makes for fantastic clickbaity headlines, but it doesn't mean jack. As you know,
qualify for the full $7,500 because the battery pack the cells come from China that are put into those standard range Model 3s. So what you could see when these rules are coming out next week is that some Teslas may get the full $7,500, some may only get $3,750. And this adjustment in the price is likely Tesla's way of saying to potential customers, okay, you don't get the full $7,500, but look, this price has come down relative to where it was.
So this is exactly what most of the unintelligent investors are focused on. Oh my God, is the gross automotive margin going to be over or below 20%? And oh my God, oh my God, oh my God. And I did a calculation last video where I even showed you Tesla's report that even with them increasing the production, they will make a lot less net profit, right? So that means that Tesla would be better off scaling back their factories and increasing their profit in the short term. But when does Tesla ever think about the short term? This is a company that is there to advance that the world transition to sustainable energy. And part of it is that they have to have a lot of cars on the road. And in these times, they can take market shares from other competitors. They can, bankrupt, to be quite honest, some of the other not very strong competitors like Lucid. I don't think Rivian is going to go bankrupt, but if you look at their bookkeeping, they're having a very, very horrible time. And while everybody is focused on this, it's like a magic trick. There's so much good happening in the company. So one of them is they just announced a mega factory for batteries, Megapack batteries in Shanghai. So Tesla is, so far they needed all the batteries that they could make for their cars. And even though they had crazy demand, like this is a product that is 2 years sold out into the future. But if the cars need the batteries, what are you going to do? And this is the first time when the cars don't need the batteries, all the batteries that they make, and they can actually set aside factories and capacity to satisfy this demand. Elon Musk automaker will break ground on the plant in the third quarter and start production in the second quarter of 2024, which is 3 quarters from breaking ground. Completing a huge existing Shanghai plant making electric vehicles, the new factory will initially produce 10,000 Megapack units a year, equal to around 40 gigawatt hours of energy storage. So we know that Tesla had to raise the price of these Megapacks because the demand was so high. And currently one Megapack is about $2.1 million. So 10,000 of those babies is going to be $21 billion of yearly revenue added to Tesla. And that is a not jump change, right? So this is something that secretly, while everybody's being focused on the auto margin, something that is really nicely growing in the background. And this actually adds quite a lot to Tesla's valuation. Based on certain calculations that I've seen online, this could add between 5 to 10% to Tesla's current valuation, right? Then you look at the latest release of FSD and the videos that people are posting about YouTube, and a lot of videos that I have seen, people are driving basically without disrupting the AI. So the AI is completely capable to, drive from one point to the next. And this is also why it's in Tesla's best interest to have as many cars on the road as humanly possible, even if they don't make any money, because they have this money printer that they can just turn on in the future. So probably the fact that they're lowering the car prices is going to result in a much lower share price. And depending on how the Q1 earnings report is going to go, this might be a further catalyst for the stock price to come down. And it's just going to make me the happier the lower the stock price goes, because I understand that this is a very short-term headwind for Tesla. They have many different aspects of their business that is developing, that is completely being missed by many investors. Tesla Energy, FSD, and don't even get me started about the robotaxi network, which is not even in any calculation. And you have the call option that is Tesla bot, right? And I'm so sure that they're going to work all this out in the future, and I can use 2023 to really make a huge position in Tesla, as long as I can get my hands on a lot of money. So I need you guys to join my Patreon. And yeah, jokes aside, I'm really focusing on building out a huge position in Tesla in 2023, and hoping that everybody is going to be laser focused on the price cuts. And I hope they have to do more price cuts, to be honest. So let me know, guys, what you think in the comments. Let me know if you're trying to build a position in Tesla, and if you are, how big this position do you want to make it? And thank you so much for watching, and I'll see you in the next video. Ciao.